Good day. Welcome to the Answers Weekly Wraps. I'm Viv Governor, and as usual, what we'll do is we'll cover a couple of macroeconomic stories at the start and do a little tech segment at the end. And our macro stories, we're going to have more than normal this week. We're going to cover the Taiwan earthquake, the Turkey elections, the US Federal Reserve, as well as what's happening in the oil market. In our tech segment, we're going to look at Tesla's latest results and what impact it has on the company going forward. So let's start off with Taiwan. Taiwan had an earthquake this last week, over 7 on the Richter scale, significant damage. Deaths have occurred. People are still missing. So it's obviously a human tragedy. But from a macroeconomic, global economic, view, it has an impact as well because Taiwan is a significant bottleneck in the global chip sector. Most of the high-end chips are made in Taiwan. They have, TSMC, this Taiwan Semiconductor Manufacturing Company, is the undisputed global leader in manufacturing certain kinds of chips, and these things are incredibly sensitive. So any kind of minor disruption to infrastructure could have a huge impact on production. At the moment, it does appear that they've gotten away with it in terms of an impact on production. Apparently, if there is some issue coming through, there will be efforts made to, for instance, cancel some holidays, have staff coming in through some normal holiday periods to make up for the production. So at the moment, it's looking like it won't affect semiconductor production globally. But obviously, with the earthquakes, you never know. There's obviously sometimes aftershocks and so on that might occur. So it's worth keeping an eye on the particular story. The next thing, the Turkey elections. Erdogan, who's the leader of Turkey, was basically ruled there for quite some time now. Pretty much controls the country with a but a really strong fist. If you just look at the interest rate policy, that's caused a huge drop in the price of the Turkish lira versus the US dollar and other currencies, which caused massive inflation and so on. That's kind of driven by his own idiosyncratic economic philosophy. When a leader of a country, a political leader of a country, is able to push through his own theory of economics, he's pretty much has a very strong, to put it mildly, grasp on power. Anyway, what happened was his party lost a bunch of local elections. This is the first time they've done it. They lost them in a while. This is something I think worth keeping an eye out. There has been apparently rumors of some, violence after this. The courts are backing the non-majority party, or the non-incumbent party, rather, leader. It was leadership, the people that are the opposition, effectively, and saying that they won it fairly and squarely, and they should be awarded power. Erdogan has come out and said he's going to respect the results. So fingers crossed that this does occur. Turkey has, to a certain extent, suffered from the same kind of thing we've seen in Russia, where a leader came in, initially very successful, but probably been in there a bit too long, and that's resulted in him doing things that are, without any kind of pushback from people around him. This is the big danger of autocratic regimes. Like I said, Russia, probably China, maybe even India, all have leaders that have been around for a long time, that have a huge amount of personal power, and the personal power allows them to do things that maybe, a weaker leader wouldn't do, and maybe that's a good thing not to do those things, because very few people are always correct, and if you just put through every single thing a person wants to do without having some kind of pushback, it can result in disasters. Turkey has had issues, like I said, with inflation. Russia with the war, of course. We know what happened in India with demonetization, and China, with the more recent belligerent policy of the Chinese government, especially towards things like their tech companies, has been really impactful in terms of pushing down prices there. So yeah, Turkey worth watching. Thus far, it does seem like the opposition winners are going to take power in the places that they did win, and if that does occur, it's really a good sign for the country going forward. Next, oil market. Oil prices have risen quite dramatically over the last little while. We're just under $90 a barrel for Brent crude at the moment, fueled by a couple of things. Firstly, we know that OPEC is wanting oil prices to be a bit higher. At one point in time in the last few months, it was like the mid-70s for Brent crude, not the level that the OPEC countries want to be at. So they basically are holding firm on supply. There's been some defection, like Angola and so on, from OPEC, but the general, OPEC countries, the big ones, especially Saudi Arabia, and OPEC plus, we include things like Russia, have really held firm in terms of trying to keep prices higher than they would otherwise be in the market. The next thing is that there's been a couple incidents have been happening over the last few days. Firstly, there was a major attack in Russia on some infrastructure, very deep into central Russia, by the way. So that means that if this was Ukrainian, the Ukrainians traveled a long way into the country and did damage to infrastructure that should have been like farther away from where they could possibly have attacked. If it was internal, then Russia has some significant saboteurs inside the country that obviously is also a very big danger. So this is something I think which will affect global oil markets, because Russia still supplies oil to places like China and India, even though they're pretty much forbidden from doing that in the West or to Western countries. And if you don't have oil coming into China from Russia, you're going to have to go buy it in the general market. That's going to raise demand and obviously increase prices. And also there was an attack on an Iranian official at a Iranian consulate. That is obviously something that could further, widen the war in Israel, Gaza. This is something I think that is the big danger. As much as there's a human tragedy happening in Gaza, it really doesn't affect the global economy. It's when it goes outside of Gaza, when, for instance, the Houthis are attacking ships in the Red Sea, or when Iran gets involved and possibly does in the Straits of Hormuz, that this war could have a more significant economic impact out there. These Iranians, as I speak right now, have not yet retaliated, but there has been a rumor that there'll be something coming through the next couple of days. Let's just see what this might be and what we will see coming out of it. It must be noted here that in this particular kind of scenario, I don't think the Iranians want to get into escalating war. I do think the Israelis want to get into an escalating war. The Israeli Prime Minister Benjamin Netanyahu has really significant political issues and criminal issues. It's unlikely if he does lose power, he's going to face a lot of criminal cases. He's going to spend the last years of his life effectively fighting for his freedom in court, maybe. And that I think is a very strong incentive to go and try and keep the current crisis going. Because as long as the current crisis is going, he stays in power, he stays out of the dock, and that is obviously positive for him. The Iranians, on the other hand, I don't think really want to get involved in this. It's because they know if they do get involved with the Israelis, it'll be an excuse for the Americans to get involved here as well. And the Americans, there's a significant wing of the Americans that are willing to basically attack Iran, or want to attack Iran for quite some time. And Iran has put itself firmly on the Russian side. I mean, the Shahid drones that are attacking Ukraine come from Iran. So it would be part of a greater anti-Russia, Iran strategy for this to continue like it is. So yeah, this is the next bit of danger out there. And finally, the US Fed. The US Fed at the moment is looking at data, as they say, in terms of determining when to cut rates. So just to give a bit of a history, final quarter of last year, we had the US, rate assumptions kind of change. At one point in time, we saw, the US 10-year yield was like, about 5%. It dropped significantly from that, starting around October last year. Bill Ackman, by the way, the famous investor, got that almost exactly right. He announced he was getting out of his, short on the US bond market, and it worked out almost exactly correct for him. Bond prices have risen as interest rates have fallen over the last few months. However, by the start of this year, expectations kind of reach a peak for cuts for this year, and since then they've come down dramatically. The Fed has kind of been talking about 3 cuts for a while, but if you look at what the market was pricing in, they were pricing a significant chance of cuts by last month. They were pricing virtually a certainty of cuts by June, July, and they were looking at like 4 to 5 cuts for this year. Right now, if you look at what market expectations are, there's like a 25% chance of only 2 cuts for this year. The majority is saying 3, but a 25% chance that there will be just 2 cuts this year. This is a significant drop-off in terms of expectations for rate cuts for 2024. This has not really affected itself in the financial markets. We have not seen share prices come down. So what's happened is share prices have risen up dramatically on the expectations of rate cuts, but when those expectations have been removed, the share price has not returned to the previous levels. So this is something to be concerned about. I don't know whether or not the market is just looking forward now and saying, yeah, it's not happening right now, but it's still going to happen in 6 months' time. So, to keep it the way it is, or the market basically is due for a pullback as, this repricing needs to occur. So that's the scenario around interest rate cuts at the moment. And then finally, let's look at Tesla. Tesla came out with results this week. Significant disappointment in terms of sales, a build-up in inventories, which is unusual for Tesla. Tesla usually sells as much as it can make, and that is obviously something that's been disappointing for the share price. And the price initially on the day dropped over 6%. It's since, end of the day about 4% down. It's slightly up since then. But the share price overall is down significantly from highs a few years ago. Now, what do we make of this? Quite frankly, I would say nothing. If you're pricing Tesla as a car company, this company is massively overpriced. You don't even want to be looking at it. To give you an example of just how overpriced it is, no, there's other famous car companies from the US. What are they? GM, General Motors, and Ford. Add the two of them together, they were about $100 billion. Tesla is worth over $500 billion. So GM plus Ford together are worth less than Tesla. You can add in VW, like the biggest car maker in Europe, to that, and they're still worth significantly less than half of what Tesla is worth. Two other biggest companies in Europe, sorry, in the US, the biggest company in Europe added together doesn't make anything near close to Tesla. The only company that comes close and still is not in the same benchmark, but closer to half value of Tesla is actually Toyota. But as a car company, Tesla does not make any kind of sense at all. Are you going to say that Tesla is more valuable, and not just more valuable plus a margin, than VW plus Ford plus GM combined? This is a significant, bet to be taking. They don't produce as many cars as these companies do. They don't have the long history these companies do. So valuing it as a car company does not make any sense from that point of view. If you value it as a car company, I'd probably be looking at, less than a quarter of its current valuation, and that might be aggressive. It'll still be more valuable than, GM plus Ford combined at a quarter of the current valuation. So why do I have Tesla in my AI portfolio? Why do I still have Tesla as a pick? I put it as a pick this week on one of the news channels, because Tesla can't be valued as a car company. It's valued as something different. It is valued as a tech company. Why? Because the technology it's trying to do or create is going to be as impactful in the world as the invention of cars overall. And this is its full self-driving technology as well as its robotics technology. Now, what do I mean by this? Well, when it comes to cars have pretty much stayed unchanged in terms of their use case over the last 100 years or so. Since we first had cars come out, from the Model T back in the day till, the newest BMW models or whatever it may be. Cars have been the same thing. You basically generally take petrol, but maybe they take diesel, or maybe they take electricity. You drive them, you use them the same way. Your life doesn't change by getting a Tesla vehicle, even though it's an electric vehicle, versus getting a petrol vehicle. Yes, you charge it slightly differently. You charge it at home or you charge it at a charging station. You can't do super long trips because the refueling time may be a bit longer than just filling your petrol up. But generally, your life is the same. You drive the car to work, you drive it home. This experience of your life on a day-to-day basis is relatively similar. With full self-driving, that will not be the case. In full self-driving, you basically have a totally different kind of use case for the car. You may not even have to have passengers. You could just be using it for delivery vehicles. It's something where you may not be using your car the entire day, so you let it be used as a taxi while you're not using it. It's a case where, because you're not driving the vehicle in the morning or the evening, you don't mind an extra half an hour of commute, because you could be sitting in the back reading a book or even sleeping while the vehicle takes you to work or brings you back home. It changes how your life works by having a full self-driving vehicle versus just having a car. Okay, and that impact, I think, is going to be pretty substantial. Like I said, you won't just going to see cars out there with this particular new technology. You'll see much smaller vehicles, maybe not even vehicles. Will transport drones, can't put a human being in there, but you can transport maybe a couple of kgs of groceries, or maybe, post or whatever it may be, pizzas, you can imagine a scenario in which, a pizza company would have 10 of these things sitting outside costing whatever price they cost, and then just having to deliver pizzas to clients. There need not be a driver in there. The payment would have been made by a credit card. It just comes there, delivers it, you give it a code, you open it up, you take your pizza, you're out. That's it. It could be a scenario in which, like I mentioned, you own a car, but when you basically stop using it in the morning to drive to work or take it home in the evening, you could assign maybe 4 hours of the day for this car is available for public lease. So anybody with a special app, for instance, could just go and rent that vehicle and use it for a few hours and get it back to you. Why would it be something that you'd be willing to do with a driverless car? Would you not be willing to do with your own car? With a current, driven car? Well, firstly, you don't know who the person is that's going to drive your car and what kind of damage you might do to it in terms of, accidents or so on. That's number one. Number two, it's probably going to be easier to find that car if instead of a normal vehicle, because that person can't just drive it off wherever he wants to drive it off, and your car would basically have to follow certain instructions, and so you're not going to have that same risk of theft and so on. So that's the kind of use case we could see with these vehicles coming into place. And like I mentioned, you're not going to just have it used for vehicles. You could be having used for the Optimus robot that Elon Musk has been pushing out there. If you're looking at Tesla's valuation, it is not about the cars it's making currently. It's mostly about the technology. Like I said, if it is just about the cars, 1/4 of the current valuation is optimistic. So it has to be about the other 3/4 of the valuation that we're looking at when you value Tesla. And it's all about the technology, full self-driving, and the AI technology around the Optimus robot and so on. And why did I say this is still a pick for me? Well, because in the last few weeks, what's happened is, I mentioned before that full self-driving has taken a massive leap for Tesla over the last, say, few months. People saying the latest version out there is a dramatic improvement over what they had even a month ago. This means that maybe we're getting closer to the end point of full self-driving. And as further proof of this, Musk has come out himself and basically instructed all employees who are delivering certain models of Tesla, basically everything besides the Cybertruck, to give a demonstration of full self-driving to new purchasers. Self-driving is a significant cost, like $10,000. It's almost 200,000 rands to get self-driving on your car. It's an additional cost to buying the car. Many people don't want to do that. It's too expensive, especially for a vehicle that's maybe costing $40,000 or $50,000. You're spending 40% of that value, so 20% of the valuation, basically buying the vehicle, of buying the vehicle to get this extra feature. It has to be a very attractive extra feature for it to come into play. But if Musk is confident enough that he wants to push this forward to all customers and wants this demo to be done, it does indicate that I think there is a change happening at the company. If we do have full self-driving, honestly, I think Tesla could be worth significantly more than it is right now. A multi-trillion-dollar company would not be out of the question, from about $500 billion right now. But of course, we need to have this technology come into play. And Musk has promised this in the past, and it's often been delayed. I just think that right now, with the latest reviews as well as the policy change around demonstration and so on, it may be closer than we think. Okay, and that is Tesla. Okay, thanks for joining me. I look forward to speaking to you guys again next week. Cheers.